A close eye on the markets for you this morning. Shares in the US bouncing back in the last 24 hours despite tariff fears hitting stocks in Asia and Europe after US President Donald Trump suggested that he was planning import taxes that could hit, quote, all countries. A lot of concern out there on the markets at the moment. In recent weeks, we've seen safe havens like gold doing very well indeed as investors, well, they bide their time to see what happens with Trump's tariffs on what he has called America's Liberation Day today. Let's get some more analysis on this with Nick Marro. Nick's the principal economist for Asia and lead analyst for global trade at the EIU, based out of Hong Kong, joining us live on the line this morning. Nick, thanks so much indeed for your time this morning.
Yeah, thanks for having me. Questions are plenty.
Nick, I'm not for a minute thinking you've got answers to all of these, because I think we're all fascinated to see what happens next. A couple of questions that are doing the rounds at the moment. Well, let's do the countries question first. Which countries could be affected by these tariffs?
Well, that's the million-dollar question. I mean, Donald Trump has kind of gone back and forth between this idea of targeting everybody and maybe targeting, the top 15 markets that are the worst offenders in terms of the U.S. trade imbalance. And so really, it's anyone's guess. At the same time, I think we can guess with reasonable certainty that China is going to be on this list. He's expressed some dissatisfaction with the European Union. Mexico and Canada are likely going to be held hostage to those automotive tariffs that are going to come into effect on April 3rd. And so we have some signs of who is likely going to be included, at least, vis-a-vis their regional peers. But when you're thinking about, say, markets in the Middle East or markets in Southeast Asia, markets in Latin America, there's still a lot of uncertainty. And it's that kind of uncertainty that is really driving investors to feel pretty crazy at the moment as we kind of wait for the U.S. to finally settle on these designs.
You mentioned the word settle there as well. I mean, I suppose the other question on a number of people's lips at the moment is just how big are the tariffs? I mean, campaign trail last year, he was talking about 10% across the board tariff and all imports coming in. That's gone up to 20%, even 60% has been thrown in on imports from China as well. Your reading, again, I know that there is more than enough fine print out there, but how big could these tariffs be?
Well, they could. Well, first of all, it'll be anyone's guess.
Yeah.
But second of all, I think some markets are going to be more exposed than others. I mean, when we think about the 60% tariff threat, that's somewhat of a very China-specific duty. We're not expecting the tariff announcements on April 2nd to be the end of the story for China. We're still expecting tariff rates to rise quite significantly when it comes to Chinese exports, but that's not necessarily going to be the case when it comes to exports coming out of Vietnam or Japan or Singapore. And so I think we're going to still see some degree of variation here. All of this being said, I mean, this isn't going to be kind of the final story for other markets either. I don't think we can kind of see these tariffs come out in early April and then just assume, okay, this is it. This is going to be kind of the end of the line. We still are going to have, 3.5 years of a Donald Trump presidency to contend with. And in that interim period, there's still going to be, frictions tied to trade, tied to security, tied to immigration, in ways that could all lead to higher tariff application for other markets as well. And so I think even if we do have this eye on, a 20% tariff rate, that doesn't necessarily mean that it's going to be the final rate for a lot of these markets.
And with so much uncertainty out there, it goes with reason that analysts and investors are a little bit nervous at the moment. But how nervous are you, Nick, when it comes to the potential of an all-out trade war hitting the global economy?
Yeah, I'm very nervous. I mean, we haven't seen something like this happen in a long time. I mean, there are comparisons drawn to the Smoot-Hawley tariff back in the 1930s in terms of how disruptive this could be, as well as the kind of wide-ranging scope of these measures that not only will have implications for the U.S. economy, but really for the global economy. I mean, we are very much staring down, the edge of a cliff right now. And if we think about kind of how tariffs were imposed during Donald Trump's first term, back then we had investigations, we had periods of public comments, we had somewhat of an on-ramp to the escalation of these duties and these shocks. These days, under the second Trump administration, we are seeing tariff announcements with only a week's notice, or in the case of China, sometimes a day's notice or even less than that. I think this kind of volatility, whereby tariff timelines and the intensity of tariff rates are just being compounded and accelerated beyond anything we've ever seen before, That's bad news. That's bad news for investors. That's bad news for certainty. That's bad news for business planning. And that's going to be something that potentially could be a constant in the global business environment as we look over the remainder, not just of 2025, but the remainder of Trump's current term.
And it is one of the big risks here. I mean, obviously you and all of us will be keeping a close eye on the markets as and when they develop throughout the day and how they react as well. Again, uncertainties as to where the investments are going. But is one of the big risks here the risk of tit-for-tat trade measures, if you like, retaliatory trade measures? We've already had sentiment coming out of the European Union in the last 24 hours. We know where Canada's stance is as well. Could that be the sort of the means for the escalation?
Yes, exactly. And when we think about a global trade war, it's not just tariffs imposed by the U.S. It's reciprocal tariffs imposed by China, Canada, Mexico, the EU, potentially Japan. Many of these markets aren't going to sit by idly, whether it's because they don't want to be seen as weak or because they have to answer to their own domestic voters in terms of we are not going to get steamrolled by the Americans here. The EU has already come out with a list of products that it's planning on targeting. China, since February, has already unveiled a number of measures targeting either U.S. goods exports or even U.S. companies operating in this market as form of retaliation. I think this idea of tit-for-tat retaliation is not going to be every market. So, for example, a place like Vietnam or Malaysia or Singapore, maybe they're not in as much of a position to respond in this way, but it could be a strategy for many markets. And when we see that tit-for-tat escalation kind of emerge and these compounding effects start to materialize, that's bad for growth. That's bad for trade. That's bad for policy. That's bad for uncertainty. I think investors are going to have to look down a very challenging landscape as they try and navigate the remaining.
Yes, it's going to be a
months and years of
fascinating day ahead. What's the one thing you're looking out for? What is the one indication you'll be looking for a little later on today, Nick?
There's a lot that's coming out, but really it's going to be the final markets that are targeted, any exemptions that we could see, and then the final duty rates. Because if we see currency movements, if we see supply chain reshuffling, this could allow some businesses to try and absorb some of these tariffs in ways that don't necessarily pass these effects fully onto U.S. consumers. But right now, the situation does look pretty pessimistic, and I think the idea of exemptions or other types of carve-outs, that's not looking too likely right now, so we're all holding our breath.
Brew that coffee, Nick. It's going to be a long day in front of the TV screens, that's for sure, and the market screens as well. Nick Marro is the principal economist for Asia and lead analyst for global trade at the EIEU, based out of Hong Kong, joining us live on the line. So big thanks to Nick. Ahead, what is, well, a fascinating day for many, and again, a day that we'll get more analysis on, not just today, throughout the day, but also tomorrow here on the Business Breakfast.
Dubai Eye 103.8 traffic.
With Yas Island Abu Dhabi. Stay at iconic hotels.